And what's the newest brick, Stephen?
Well, the newest brick is the Iran war. The brick before that was AI is going to destroy the world and free cash flows are declining.
So the AI disruption story, by the way, is still going on too.
Yeah, that's still out there for us once we get through. I mean, we just before the war started, somewhat presciently, we had no idea, but we did lower our target for the S&P for the year, largely because of that story,
right?
And taking down our multiple on the market. So we think we're in a kind of single-digit return market the next couple of years. We're going to get through the war and then work back to that environment.
Well, let's talk about the potential scenarios here. Your base case, which is a 70% probability, is a quick end to this conflict. That takes us to 7,500 this year. Timetable, another month, because obviously a quick end means different things to different people.
Yeah, I'm kind of like cutting a percent of probability off a day at this point. I think a quick end means somewhere in the next month or so, you get an end to this thing. I still think that's the base case, but your guess is as good as mine, Charles. This is like playing a multi-dimensional chess game with a lot of smart people, and it's really hard to sort out how this ends.
15% chance of in a bull case, that would be regime change. That would take us to 8,200. It feels less likely, although some are saying, hey, some in the know are telling me, don't discount that. This still can happen.
Right, and President Trump this morning is sort of playing for that in some ways. He's almost trying to call it, he's got a new regime in place. Right. He said that. So I think he's trying to angle towards, hey, can we do a deal with these guys and call it regime change? Regime change gives us more upside, but to get there, I think the market has to more downside first.
So this is the bear case. Iran conflict widens. So the Houthis got involved this weekend. I think everyone kind of thought they would at some point, but it feels to me one of the big stories coming out of this is how their neighbors have rallied against them for the most part. So when you say widen, you mean just the conflict lingers on, or more participants?
That it lingers on, and they start taking out really key oil facilities. For instance, if we invade Karg Island, or if the Iranians take out some big oil refining facility in Saudi, something like that, right. That kind of digs this thing into longer. And the longer it lasts, the more of a tax this is on the global economy, and the more we're going to probably have to take down our GDP forecasts.
I want to ask you about something that's been in the works, but they picked up today. U.S. Department of Labor, the democratized access to alternative investments. This private equity, private credit thing, it's been really ugly. These stocks have gotten hammered pretty good. They're up ironically today, but just again, your thoughts. This sounds like a good idea to let regular folks buy these 401ks, but should there be safeguards put in place?
There's got to be safeguards, Charles. These are for sophisticated investors who don't need liquidity and have a long-term time horizon. The average retail investor is not that person. So we're already seeing it with these private debt funds.
Right.
The ones that are causing trouble are ones with retail access. People want their money back.
Yeah. And people are saying buyer beware, but these are folks, you can't sell someone a retirement package and tell them they can't have access to their money.
Yeah, I mean, it doesn't work. I
got to give you props. So this is a stock you gave us on this show. You told viewers it back, I think, in July at $5.50. It's doubled. Essentially, it's doubled. Are you still holding it? The oil company on the Toronto Stock Exchange, are you still holding this one?
We have this as a small position in one of our funds. We do still like oil here. We own Chevron as an example, right. As an example, a stock I would hold on to here for sure.
Something like this, though, maybe take profits into strength. I mean, if you double your money in 8 months, I mean, relative strength is off the table.
It's been a nice little rocket.
Take a little bit off?
Could take a little profit here, but even in the base case or even in the bear case, it looks to us like oil's probably stabilizing higher. So. Right. We like the energy stocks.
So even if a snap pulls back, it's not going to get back to the 60 level anytime soon.
Yeah, but I would stick with a bigger diversified name like I was mentioned, Chevron.
Let's talk about going on offense for a moment, because I had to ask you, Micron's on your list here. It's getting slammed again.
Slammed, down 7% today.
They posted one of the most incredible earnings reports in the history of stock market, and it's been down every single day since. First, it felt like typical sell on the news. Since then, there's all kinds of talk about algorithms and other things that may hurt their business materially. You think this is creating a buy opportunity? Right,
because these offense names, defense names are one thing for the war prolonging, but right. Offense is what happens next. And there, I want to go with companies that are increasing their free cash flow, because a lot of the big mega tech stocks are actually declining in free cash flow. These guys are probably, they're probably 8x free cash flow in the next 2 years. They've got an oligopoly in DRAM. I know there's some near-term issues, but I think you got to, at 4 times earnings, you got to look at this name.
It looks like, I mean, it looks amazing on paper, but every day, again, today it's down 7%.
Yeah.
Again, the Chevron, you've given us this, it's already up, but you say stick with it defensively. AbbVie and PepsiCo.
Big defensive names here, that are all increasing their free cash flow the next couple of years.
Stephen, great stuff. I appreciate it.